So in this video, we're going to take a look at the ETF report itself, the signals, how to read them, whether you're placing the orders yourself or whether you're having them placed on your behalf through our desk. This is Michael Thompson, the equity advisor and analyst at JB Markets. So just have a look at the disclaimer before we can go through this. Anything we cover today is for general advice and doesn't take any of your personal circumstance into consideration. Past performance is not a reliable indication of future performance. So let's have a look at the ETF report signals, the weekly orders. We'll go through how to download the sheet for those who are placing the orders through our desk. Before we do so, we just want to cover the basic of reading the reports, the charts. So there's 5 ETFs in the portfolio, each designed to give you a balanced overall portfolio. They use the same strategy, enter slightly different, giving us a bit more diversification so they're not overlapping each other too much. So the first one we're looking at here is QLD, which is based on the NASDAQ. This moves 2 times the general movement of the NASDAQ. So for every 1% move, this moves twice the daily movement. Now you can see the corresponding chart. There's 2 things I want you to pay attention on the chart. The first is the green line here. That's our profit band. That's one of our exit criteria. The most important one, which is the one below, that one there is our reversal band. So the reversal indicator itself will get us out if we cross above the red line. That will get us out of a position 80 to 90% of the time. So you can see below, this is dated for Friday. This comes out once a week, so you'll see this date corresponding to any change that's been made or any updates. Now, you can see on the 13th, which is last Friday's date, we had an order to place a buy stop at 102.86 and a stop to go with that at $72. Since these orders are not in the market, you'll see they're dashed on the chart. They're not solid lines. They're indicating that this is an order. Once they're filled, they'll become solid horizontal lines, indicating that we've entered the position. So this order is a buy stop. If those not familiar with a buy stop, it's an order you place above the closing, at or above the closing. It allows you to enter the price whose momentum is going that direction. So you're buying in the direction of momentum. If the market does gap open, let's say it opens up at 103 up here, we will get filled at the opening price. That's what this order does. So it's only going to fill you when the direction of the market goes to that level or higher. So it's a direct opposite to a limit order. Let's move on to the next one and have a look at the next ETF and how to read this one. So this one, we're already in a position. You can see that we are in at 50.39 and the line is solid, so it's indicating we bought at 50.39 on this bar here, and our stop has been moved to 54.20. Now if you look below on the chart, on the instructions, now XVXY is an ETF based on volatility. The explanation is below. So it's based on the product. It's on the futures market and it's designed for those who want to take advantage of volatility as volatility is falling. This is known as what it calls an inverse. So it's the opposite to the original volatility, which we'll have a look at after this or shortly after this. You can see on the 7th of June, we entered at 50.39 and we've had 5 adjustments to the stop since we've entered this trade. The most recent one is on the 5th of July and we moved the stop from 52.25 to 54.20. Because this is volatility based, we managed to exit quite stringently or strict, meaning that we will adjust the stop loss, the trailing stop, to adjust to the market. Each week you'll have a change in price, so you should expect to adjust your stop. In some rare occasions we may not move because the volatility hasn't changed much based on current price and what the current volatility is at. But as you can see, we've made 5 adjustments. Originally, when you placed the order, the stop was much wider, giving the market room to breathe, but now it's sitting at 54.20, which means we're way above our entry price. We've locked in a significant amount of profit already. So let's move on to the next one. That one is the NASDAQ one. This moved 3 times the daily movement. There's TQQQ, TQQQ, and it will move 1% movement on the NASDAQ would mean a 3% movement on the TQQQ. As you can see, we entered about a month ago at 50.79. We placed, as I mentioned, being a buy stop. Our original price to enter the order on the 16th of June was 57.63. However, the market gapped open a little bit higher than the entry. We got filled at 57.99. We've only adjusted the stop. The last time we did was on the 21st of June. As I mentioned, the reversal indicator is the primary order to exit our position. We're waiting for this to pull back down below the red line and then cross back up. So there's really not much to do on TQQQ until we see most likely that to occur. The trailing stop is in place, but it's allowing for room to breathe, being a more volatile product, or ETF for that matter. So it's adjusting accordingly. The one that we usually would keep an eye on is the reversal indicator, the blue one below. As you can see, there's nothing really to do since the 16th, the 21st of June, I mean. Now, UPRO is based on the S&P 500 index. This one moves 3 times the daily movement of the S&P. You can see we entered in here at 51.74. And we have our stop at 47.60. The original order was on the 15th of June at 51.60. Our stop loss was 47.47. We got filled that 21st of June. The market did open up a little bit higher and we got filled at 51.74. And we raised our stop loss slightly to 47.60. And the last time we had any instruction to do anything was on the 21st of June. So we haven't done anything really for almost a month. Same occurs, the most important indicator to look for is a reversal. We're now above the red line, the threshold. We have to wait for it to pull back. But we also have the fact that it's very close to our profit band. So there's a high probability this week if we close 30, maybe 20, 30 cents above it, we would exit based on the profit band. So that's that one there. That gives you instructions on the UPRO. And the last one here is the one that I'll spend a little bit more time because it's based on taking advantage of a bear market. So volatility, how it works, VXX, is that when markets are falling, volatility rises. So you'd expect this to occur during times of volatility. So we would take a long position once volatility is rising. The conditions are really almost identical to the other strategy. However, there's an addition, because we're trying to short the market in that essence, we need to make sure we're on the right side. So by looking for the rising trend, which is those green boxes, it means that we have a good chance to be on the right side of this trade. So unless you see a green box, which is the rising trend, we would not have an order to be placed. And you would expect that because we're shorting the market through using this product. Market's been rising. We haven't had anything to do for almost 6 weeks now. As you can see, the accompanying instruction below says there's no new orders. Until you start seeing the green box, there's not going to be an order to be placed for this ETF. So that covers the instructions on how to read the report. Now I'll run through actually how to use the order sheet. If you're placing an order, you just need to do some basic calculation, which I'll show you shortly. So if you click on the actual download up the top, it's going to download the order sheet. Or view the order sheet, so you can download by clicking this button here. And that will allow you to download. So if you hit that there, it will download it. And then once you've downloaded, open up the sheet. And we'll go through the instructions. So what you need to really do is to type in the amount of capital you have. The minimum we suggest is 10,000. This will do the calculation automatically based off that value. And if your account is larger, it will allocate 20% of your capital. So in this instance, we also add the currency conversion. So let's type in, let's say you had 50,000. It's now going to calculate 10,000 off that amount and allocate it to each individual ETF. It'll also take currency conversion into consideration. So you see it's been adjusted. It's saying we're buying now in US dollars, 7,017 at 102.86, and our stop is placed at 72. You're placing yourself, the minimum we suggest is to have 5,000 to cover your costs and also have a decent sized profit. Once you've done that, you save the sheet, attach it to your email and send it back to our desk and we'll place it for you. So equities dealing, send it back there. Now, if you're not doing all the orders, you should accompany that with a instruction which I would have gone through with you, just to say you want to place the orders of which ETF, and that'll be the same ETF every week until you make any changes, of course. That will cover this video in regards to reading the ETF report. If you have any further questions, feel free to give me a call on the number listed below or send us an email through to equitydealing@jbmarkets.com. See you again in the next video.